Welcome to Drill Down Earnings. We have the latest results from Docusign. I'm Cory Johnson, the Chief Market Strategist for the Futurum Group. Docusign, such an important software company, and my neighbor. They're right down the street here in San Francisco. I'm in the Ferry Building at Shack 15. They're kind of right down, I think, on Spear Street. I don't know, right down the street. In any case, the business story behind this stock on the move is such an interesting one, but also the stock is on the move, selling off a bit after these results. Now, Wall Street likes it a beat. Some people are calling this a skinny beat because they just kind of barely beat the numbers out there. Revenues for the quarter of 709 million, 710 million if we round accurately. And operating expenses, maybe not as great as they have been in terms of margins, but specifically their non-GAAP operating income was 28% of revenue. That's great. Again, these are non-GAAP numbers that they like to use. And when we look at their billings, 202 million in the quarter, great. They cut their headcount there, really important. One of the many big companies in technology cutting their number of workers. In particular, they spent a lot more on sales, but R&D and other things as a percentage of revenues fell. And so what you saw is they went from 6,586 employees a year ago at this time down to 6,441 employees. And that, of course, those cuts are expensive when they happen, but over time, reduce the overhead for this business. And they need to do that to put up a consistent profit. But I thought one of the most important numbers out here, with the revenues growing at 8% on a year-over-year basis, $691 million, but billings only growing at 7%. And that wasn't great for this business. Single digits still, not the fantastic growth we once saw from this company. Now, I think of Docusign as a company that you use to sign stuff, right? You get a contract in the mail, you get a mortgage, whatever, loan documents, those kind of things. But they think of it much bigger than that. They think of it as an agreement engine, and they talk about the use in sales and the use in HR and the use in service and the use in procurement and marketing and legal. And they look at businesses that don't use Docusign and say they spend 18% more time getting stuff done. And getting stuff done, of course, is the point of business, making some money in the process. Speaking of money, I should also mention that they announced $1 billion stock buyback on top of the 140 million they've already got left from their previous buyback. Nonetheless, it didn't help the shares. Once they announced this quarter and the sort of lack of really strong growth and the reacceleration that so many analysts had hoped that a bigger market might lend them with new leadership at the company, not materializing yet. So the stock was down as much as 10% in after-hours trading after a pretty lousy year, down 8%. And man, if you look at a 3-year chart for this company, 3 years ago, the stock was over $300. Now it's around 50. So really painful times there. And when you think about what this does for morale at the company, you've got some people who have stock options that will just, maybe never get to that $300 level when they might have been issued. That's an issue for the company as well. Now, again, when they talk about their business, they talk about the great big opportunity out there, in particular using AI, what they call IAM, or Intelligent Agreement Management, IAM, Intelligent Agreement Management. It's not just signatures. They launched this using AI in April, and they think they're gonna take their agreement data and it'll make contract reviews happen faster and help productivity for all the companies that use this stuff. But they also say it's gonna take a while till they get back to double-digit growth. The CEO is saying we're gonna get back to double-digit growth someday, but not this day. Allan Thygesen, the Docusign CEO, had this to say.
It's still an evolution. I think we sell to enterprises very heavily today. I think we're in 93% of the Fortune 500 and similar stats in other countries. But there's a difference between selling a point application and then an enterprise platform for agreement management. And I think we still have some growing to do there. So I'd say from an execution standpoint, that's where I'm the most focused. But we feel it's in our control. We have a large addressable opportunity, a great set of products, strong customer relationships, and it's just up to us to capitalize on that.
So it sounds like a marathon, not a sprint at Docusign, but investors are certainly sprinting for the exits, at least with a 10% down in after-hours trading for the stock, making up some of that during the trading session on Friday. All right, what's it all mean? One big number that I want you to remember that's going to really tell you the whole Docusign story right after this.
The Drill Down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
All right, Docusign earnings, first fiscal quarter for 2025 for this company. Here's the essential numbers that you need to know. $1 billion stock buyback should help things with this stock, could reduce the shares by as much as 10% from where they were a year ago, assuming the price is kind of where it is right now. Total revenue, $710 million in the quarter, up 7% on a year-over-year basis. Subscription revenue, most of that, of course, increasing at 8%. But the billings number, I think the most important number for this company, the bite, the one number that tells you a whole lot. And billings were up 8%, $710 million. That's not the kind of double-digit growth that this company used to put up, and they say, well, they will put up at someday in the future, but not yet. All right, thanks for listening to Drill on Earnings. I'm Cory Johnson. Check me out at X, at Cory TV. Tell me what you think. Leave some requests. We'll see what we can do. And of course, check out YouTube for the Futurum Group's page on YouTube. All right, 6.5 Media brings you Drill on Earnings.